Good morning, traders. It is Wednesday, the 8th of June, 2016. It's 8:01 a.m. Chicago time. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news flow overnight is pretty light. The key element that we need to be aware of overnight, let me turn down my news feed here, is that the European Central Bank, the ECB, has started buying its corporate bonds, according to what Draghi had mentioned or announced the last appearance. It is estimated that 700 to 500 to 700 billion euros worth of debt is eligible for this program. The euro's up, and it was trading at $1.1370. So there's some stimulus coming into the market there. Also, the World Bank slashed its global growth forecast for 2016 from 2.4 to from 2.9 to 2.4. China's growth has been cut from 6.9 to 6.7. China's trade surplus grew. Uh, Exports fell 4.1% year over year, missing the 3.6 decline, and imports slipped 0.4%. Japan's GDP beat. It came in at 0.5 during the first quarter, 0.4 expected. Crude oil is hitting 11-month highs again this morning, leading the pack. The overall market sentiment is fairly bullish, except for the Euro stocks and the DAX. They've been a drag. The dollar's down, of course, because the euro's up, but overall, crude oil is trading at 51.06. It's gotten as high as I think 51.15, and next is gold, and so money is moving to risk with crude. The equities are also up after dipping overnight. We'll look at that in a minute. So it is. That's how things are shaping up. Looking at what we've got today, we have the U.S. JOLTS job openings for April at 9 Central, 10 Eastern, 5.675 million. At 9:30 Central, 10:30 Eastern, we get the crude oil inventories. Crude oil inventories expected at negative 3 million barrels. U.S. distillate inventories negative 700,000, and gasoline inventories expected at negative 1.25. Other than that, we have very little going on the calendar. So once crude oil is out, we're pretty much done on planned releases for the day. Let's switch gears and take a look at what was expected yesterday. Again, every day, just reviewing what we looked at. So yesterday, by the time the trader bite was going on, as you could see here, 15 minutes and 55 seconds into the trader bite video, we had basically we were trading at 2109.50, which was in value. The value range of the prior day, which was Tuesday, which was Monday, was valid, and we were opening in value. So the expectation is that we would bounce around value. We would bounce around value on Monday's value before climbing higher and finally taking out that 2114.50 area. And so that was the push. This is what you see here on hypo 1. On hypo 2, switch to that. If that wasn't going to happen, hypo 2 was an early attempt higher, and overall expected it to fail at 2114, 2114.50, and then to start its rotation down towards the 2101 area, 21 back to 2100. That didn't happen. Mostly the hypo 1 was in control. Here's what actually happened. The market actually opened slightly, just a little bit higher. Did not have did not make any attempt lower at all. The expectation is it would test the prior point of control to verify its validity from the prior day before pushing higher. It ended up pushing higher right away, and so it's not the ideal. That wasn't the ideal setup there. In the afternoon, we ended up selling off, which was nice to see, but the overall profile yesterday was very square. There was no real consensus. You could see that it's a boxy profile. Volume traded almost equally across the board. The value area, very, very odd. I've not seen a shape like this in a long time. Essentially, what this is saying is that um, prices are being tested all the way up and down the range, and there's really no consensus. Of course, with new highs, new all-time highs on this product, that's what it's likely to be. There's no way to tell what consensus is because we haven't been there before. But this is a very odd behavior as we continue to experience this kind of odd behavior over the last few weeks with these gap up rallies and now continuation higher. In my opinion, and not that it matters what I think, but in my opinion, it is a labored push up. The market is having a hard time keeping. It's having a harder and harder time getting buyers to bid up the market, and and overall, it gave up the rally, the morning rally in the afternoon, very, very quickly. And this actually gave me some hope for some actual rotation and finally to start moving down and to retest some of these areas. The key area to look at here today is actually 2109. 2109.50. We're trading above it right now. 2113. But if I put these 2 days together, they didn't quite trade inside of each other, but you can see the dividing line here is 2109 right here, the low volume node that separates these two. If we get below 2109.50, I'm going to look for a pullback toward 2111 and then a continuation if it does that. Now I'm going to be honest with you here. Given the configuration that we're in, given that the overnight session is not giving us any clues as to what is going on, who's in control here. 136,000 contracts traded. 136,000 contracts traded, and overall, that's much lighter. It's about 50,000 short of what where it is normal. We have a double distribution profile, and it just looks incredibly odd. Don't know what to make of this. In my opinion, what I'm going to look at as a primary hypo, instead of just talking it through here, what I'm going to look at as a primary hypo is I'm going to judge whether or not we test the overnight high. The primary hypo is expected to be open in range, test higher, and then fail, rotate down to 2109.50, small bounce, and then a continuation lower. That's what I'm looking for hypo 1. I believe that based on the action yesterday and the way it was printing on the offer, I expect that it's getting exhausted to the buy side, and it's likely to explore lower to find more buyers. I think the video is dropping frames here. My connection is not so great from home, I guess. Again, I'll have to get someone in to look at it. But that's what hypo 1 looks like. If we get responsive down to 2111 on the first push, and then start moving up, then hypo 2 takes over, and hypo 2 simply continues the trend. The trend dominates, and the trend is up on the higher, intermediate, and short time frame. So Hypo 2 will likely be a test down to 2111 and then a continuation up. Okay, so those are the two hypos for today. Um, Overall, it's a rally market, not my favorite market. It's actually my my kryptonite, so to speak. I don't like steady one-way markets. I trade value, so when we're making new highs, I don't have a strong hand in the market. So my plan is to just be conservative and to wait for the market to show where the strength is, and and to go from that direction. And I suggest the same if you don't have a plan for being up here, for what to do when we're in new territory. That's what I would do. But overall, I'm looking at 2109.50 as a key figure for today. I'll leave you with that. The recording for yesterday's webinar on Futures IO will be released today. Look for that on Twitter. I'll catch you tomorrow. Take care.